The financial landscape in West Africa is undergoing a significant transformation with the rapid growth of non-bank financial institutions and other financial institutions. These institutions play a crucial role in expanding financial inclusion, offering alternative financial services, and driving economic growth. However, the Central Bank of Nigeria Governor Olayemi Cardoso has recently raised concerns about the potential risks associated with the rising transaction volumes of NBFIs and OFIs. Now, to gain a deeper understanding of these concerns and opportunities, I'm joined by Babatunde Oladero, CEO, Zitra Investments. It's nice having you join us on the show, Babatunde. Thank you so much for coming around.
Thank you so much.
So,
Thank you very much. It's my pleasure to be here once again.
Of course. So let's start by educating our audience. First, what is the difference between OFIs and NBFIs? And what do you now make of the CBN governor's assessment that their rising transaction volumes pose a risk to financial stability?
Okay, thank you. So first things first, let's get rid of the acronym and describe what it really says. NBFIs are non-banking financial institutions. OFIs, on the other hand, are other financial institutions, right? So let's get that clear from the get-go. So for NBFIs, what they are institutions that offer financial services but don't have a banking license. They are not allowed to, therefore, accept traditional demand deposits like financial institutions, other financial institutions that have banking licenses can. So to make it simpler, an insurance company is an NBFI. A pension fund is an NBFI. A microfinance institution, and there are a number of them that are even big ones in town, are MFI, I usually call MFIs. They are NBFIs. On the other hand, an OFI can have a banking institution. For example, a microfinance bank is an OFI that has a banking license. Finance houses, who are licensed by the Central Bank, of course, are also OFIs. So that's the critical difference. But to go back to your main question, look, I do not see this as a problem. Again, over the last decade, we've seen a humongous jump in digital-led transactions in terms of value and volumes. I remember when the NIBS NIP was a new thing, and people were wary, will it work, will it not work, will people use it, will they not use it? But guess what? A decade ago, we were seeing anything between 4 to 5 million transactions per annum on the NIP platform. Today, we're seeing 14 billion transactions in a year on that platform. So that's what growth does. It presents a risk, right? So the risk in itself is not a problem. It's how we deal with it. And so for me, part of the, what I would call the pains of growth is the risk that we should all embrace. But it requires all of us, whether you're a regulator or whether you're deregulated, to pay attention to these risks as we go along.
Well, I'm still wondering why the rising transaction is seen as a risk rather than an opportunity or maybe an incentive to strengthen the subsector. Seeing that, these fintechs are actually extending financial services to previously underserved communities. They are driving financial inclusion and widening economic opportunities. And I'd like to get your thoughts on that because earlier on you said that these NBFIs are not licensed, they don't have a banking license. Maybe that's where the fear is coming from. But we know that on those platforms, it is written at the bottom of those platforms or those apps that they are insured by the CBN or the NDIC. So is that not enough reason to not be scared about how they are transacting their businesses? Babatunde, can you hear me?
Yes, loud and clear. You're back. So I heard the first part of your question. I'm going to attempt to answer it right away. Can you hear me?
Yes, go ahead, please.
Yeah, so first things first, the fact that it presents an opportunity does not mean that there are no inherent risks. In fact, I would argue that the more the opportunities, the higher the risks. So risks and opportunities are not necessarily, they cohabit easily all the time. and it's important that we bear that in mind. I think that even the regulator appreciates the impact of fintechs in the financial service space in general. I have been to several fora where I've interacted with regulators, and they are eager to see even more innovation within the fintech space. They're also particularly very attentive to see the ways that they can, support, at least from their own standpoint, in terms of providing the regulatory cover. So I think it might be inaccurate to assume that risks and the opportunities within the subsector are necessarily conflicting. They are not. I think that they go hand in hand. And so the more the transactions, the more the opportunities, the more the innovation, of course, as well, the higher the risk. And that's fine. Risk is not a bad word.
Okay, so let's do a little bit of breakdown and see how it applies to the ordinary Nigerian. We're talking about multiple electronic charges, poor connection services, non-functional automated teller machines, endless hours at banking halls, inability to effect reversals, amongst others that have actually dissuaded customers from patronizing these traditional banks. Fintechs seem to be more efficient in these regards. So how come fintechs were able to ace these traditional financial institutions in terms of performance and customer service delivery? Because some people feel that it is the inefficiencies of the traditional banks that actually upped the ante for these fintechs in terms of, embrace and spread.
Very, very correct. You're spot on. Look, in reality, the fintechs are closer to the customers. They're closer to the marketplace. They provide speed. They provide better customer service. They provide access. And these are some of the things that the traditional banks struggle with. It's more difficult for an elephant to dance compared to, say, for instance, a monkey. So you have a bank literally in your wallet or in your pocket or in the corner shop down the road on your street, or an agent across the street from your shop or from your office. So that's exactly what today's fintech world looks like. And it's hard for the traditional banks to compete with this because this is really, really, really retail in the execution. And look, the way that the traditional banks are set up does not allow them to take up all of these types of, they are not expensive to run, if you know what I mean. And so it's more difficult for them to address some of those very local needs that the fintechs are structured to deliver on. And that's why, as far as I'm concerned, I always say this all the time, that it's a perfect match to find collaboration between the fintechs and the traditional banks under a regulatory cover, of course, that ensures that there's value provided for all parties within the subsector and the industry at large. So, look, you call it a problem for the traditional banks. I say it's constantly an opportunity for fintechs to take advantage of.
Okay. All right. So let's look at one of the risks, because you have actually spoken about that a while ago, talking about fraudulent activities, money laundering and the likes. I'd like to know, how effective are the current anti-money laundering practices among NBFIs and OFIs in Nigeria? What are the improvements that are necessary? I remember a couple of months ago that the Nigerian government clamped down on some fintechs because most especially the crypto platforms being used for fraudulent activities and terrorism financing. So do we have rules that actually help to stop or inhibit those kind of fraudulent practices, and probably ways of improvement?
Thank you very much for that question. So yeah, like I said a few months ago, some particular fintechs were not allowed to onboard new customers on their platforms because of some of those issues you've addressed or you've brought up. And it comes down to certain things. Look, it's the responsibility of the CBN in collaboration with the likes of the EFCC and the NFIU to keep an eye on bad actors within our subsector, within the industry at large. And they have tools like maybe the Money Laundering Act and other tools from a legal standpoint to address this. But from an industry player's point of view, right, we should pay attention to due diligence, customer due diligence. We should pay attention to KYC, to enhance due diligence. We should pay attention to our suspicious transaction reports and the likes. Look, it is critical for me. Two key things are critical. One is there are transaction monitoring tools that we all should take advantage of and use and seek out. But most importantly, is that there's a need within the industry and the subsector to share information. There needs to be a lot more data shared between banks and OFIs and NBFIs, or even amongst them, the OFIs themselves, among fintechs themselves. So if somebody uses fintech A, I don't want to mention it, and commits fraud on that platform, that information should be available and accessible to fintech B, so that when that person goes to fintech B and downloads that app, he is blocked. He's already hotlisted or stopped from using that app. And so that's how we can push out all of the bad actors within the subsector. And so if we use these tools, I think we will all enjoy the industry a lot more and will make a lot more progress in terms of dealing with money laundering and cyber crimes.
But Babatunde, let me just take it on there. If we have that kind of data sharing facility being made available within the ecosystem, are you concerned about issues around data breach? Because a few days ago, that was one major topic about the data of some Nigerians being compromised. On certain platforms. So, of course, if that continues to play out, that could be a big issue for most of these customers that use this platform. So is there a way we can actually deal with that, even as we ensure that we have enough information that other platforms can actually make do with?
I don't want to go into that. I believe that the relevant authorities in this case are probably the Ministry of Communication and Digital Technologies handling that. But what I have described is not data share to the extent that you put it in the public arena or you create opportunities for data breach. No, I'm saying that information sharing as regards bad actors in the space, specifically just relating to bad actors, where and this is not only for our client. This is done everywhere else in the world, where you can easily, it allows all of us to be able to catch these entities that present us all with a serious challenge and make our industry to be weakened. Look, so I'm not asking that we put people's P9 or people's BVN out there. No, I'm saying that we can easily support one another with data, with information. And in data here, I'm just speaking to providing access to information to other entities within the subsector on the bad actors. That's all. And I think that will go a long way to dealing with some of these issues that we have on cybercrime.
Okay, I think one thing is key when it comes to the operations of these fintechs, and that is technology. And the World Bank once wrote an article titled, "How Nigeria Can Leverage the Rise of Fintech for Economic Growth." So rather than seeing them as risks, and looking at the issue around technology and other kind of provisions that aid their modus operandi, how can they be leveraged to actually improve Nigeria's financial space?
We alluded to this earlier. These entities they are closer to the marketplace. They provide customers with speed. They provide customers with convenience. They provide customers with access, much more than traditional banks can. And that's not a slight on traditional banks. It's just how they are structured. And so I can easily walk to my corner shop to see the agent with a POS terminal just across the road. I can easily, while I'm at the open market, I'm buying stuff and I run out of cash, and the seller insists on cash. I can easily access cash via that channel. I can easily take my phone out of my pocket and decide to do a job with a group of people across 10 countries around the world. So those are some of the things that these fintechs provide that some of the traditional banks may struggle with. So if I know my phone is in my pocket or my wallet, why do I need to enter a physical banking structure? So it's customer service challenges, it's access challenges, it's convenience challenges, it's speed of service challenge that has provided this opportunity. And if you ask me, this is something we have really not taken enough advantage of. And I still see that there's a lot more room for growth within the subsector as we go. Hopefully, some of the challenges we have can be taken care of, and it will make it easier for us to access for more customers to access our services.
Okay, so let's look at the fintechs themselves. Now, one of the challenges for these particular kind of companies has to do with funding. When you look at it from 2020 down to 2024, you discover that the access to funds have declined dramatically. And there are other talks around government policies which actually inhibit their operations. And one of those is whether or not they have a fiscal presence in a country where they operate. They are meant to pay some certain amounts of money in tax obligations and some other, payments like that. So when you look at those challenges and probably some other issues that you may like to itemize, are there some sort of solutions that can come to them that can help them resolve those issues and scale up their operations?
Okay, so you refer to access to capital, for instance. Access to capital is clearly something that is a challenge, and more access to capital can be helpful from the regulator supporting that. There are infrastructural gaps, for instance, access to the internet in terms of both coverage area and quality. We all know that trust level can be a lot better in terms of customer trusting the platforms. Awareness can be better. Quality of human resources presenting a problem in the last 2 years because of Japa syndrome. So a lot more work can be done on training, on consumer protection, consumer education, and I think that some of those things are going on already. But with regards to what you said as far funding and access to capital, I think it's a global problem, by the way. So we've seen a decline globally from the VCs and the PEs in the subsector, and it's a fallout of probably the post-COVID era and what have you. But I think this is just a short-term thing or short to medium-term thing. I think we'll go past this in another year or two, and we'll start to see hopefully injection of capital across the developing world once again. But instead of looking for capital from outside, maybe it's high time we look inward. And by that, I think that there is a lot of dormant capital within Nigeria that we have not utilized. Thinking about us unlocking a lot of our dormant capital, whether it's the so-called real estate or land that is locked, and we are not accessing properly or we are not locking properly, and other forms of capital across the nation. So the access capital, I think, can solved internally. Infrastructural gap, I see a lot of work going on in the Ministry of Communication and Innovation and Digital Economy on that, in terms of deepening the coverage area of internet access. On awareness, like I said, I think a lot of work can be done by players as well as by governmental agencies in deepening awareness and increasing trust. And I think that the more people use those channels, use our platforms, the more comfortable and comfortable they will become as we go on. But on the Japa syndrome, I think it presents an opportunity again. A lot of people have gone, but a lot of people still exist, still remain, and there's room to train more talent, whether it's in tech space, whether it's across board, in terms of making sure that we can have a lot more people who can work within the subsector. So I see those things, even though they're challenges, I see them also as opportunities for growth.
And of course, a few people will feel that what is important at this time, instead of seeing these fintechs as risks, is to see how, of course, the CBN and some other regulatory bodies, including the Nigerian government, can balance between promoting innovation with safeguarding financial stability within that ecosystem. Babatunde Oladero, CEO, Zitra Investments, thank you so much for talking to us.
Thank you very much.